we touch base on the current progress of my two positions. If you guys remember last time, we talked about uh, going through the Uber and Peloton covered call and strangle. So Peloton is the covered call and the Uber is a strangle currently. I highlighted in orange the current updates after my previous video. And so look at this graph right here. You see that the price effectively for Uber has never gone down. And in fact, is in this green line right here, you see it's actually surpassed my break-even points. If you look on the trading view, you also see that the price has pretty much gone from, let's see if we can zoom in here, has gone effectively from about $40 up to about $63, $61 and $61 pretty much, or $62.46 actually, sorry, the closing price. RSI has currently gone almost to 90, which in the history of this stock has never gotten to that extent. You see that it's never actually reached 90. Highest one is actually 80 since its inception in the public stock market. Maybe 83. So this is actually a new territory right here. So do I think that this stock will continue to go up? Potentially. It seems like there's a lot of hype, but this thing has gone pretty much to 90. It's at 86.69, 86.45 right now, and I think that more likely in the next 20 days it's going to go down. So what I did is actually I moved the strike price back down. You'll see that since we last talked, I kept moving the put from $50 to $55. Price still wouldn't go down, so I moved it from $55 on the put to the $57.50 strike price. So we, on December 4th, went to what's called basically a straddle. Price still wouldn't go down. You see that it kept going up. It went up to $59.75. Now it's at almost $61 as of December 7th. So eventually on December 8th, I made a decision to roll up even more. So now I'm at an inverted strangle. And so what that means is I have a built-in loss. But the good thing is that my credit has actually surpassed my built-in loss. So if you think about it, the difference between the $60 put option and the $57.50 call option is going to be your built-in loss, because you have to, at any point, at a minimum, pay $2.50 in premium. And that comes from subtracting the 60 from the $57.50 right here. So that's your built-in loss before credits. So if you look at here, I have a credit of actually, as of December 7th, or December 8th, I have a credit of $4.68. See that this column right here says average trading price. That's how many credits I have so far. So if I have built-in loss of $2.50, and this is my credit received, theoretically your max profit will be your credit minus your built-in loss. So my potential max profit is actually $2.18, assuming that the price goes in between $57.50 and $60 even. If it goes above that, this max profit actually decreases, as you'll see in this graph, up to the point where this yellow line is at. So the interesting thing, as I said, the RSI has gone to unprecedented levels. So what I'm going to do is just assume that this will eventually come back down, because again, my thesis remains intact. Every time it's gone up to these extreme levels, there's always been some violent dip in price. And so I think it's happened almost every single time. You see back here, like even up to this point, it did continue to climb. But as this RSI kept going lower and lower, and it eventually dropped down, you saw that there was a huge dip. You saw it kept continued, it went lower. You saw there's a huge dip. As you saw that it bounced back, went to the high, drop back lower. This also crashed down. You'll see here that as it continued to climb up, there's a violent dip again. So I'm thinking the same thesis will happen, but even more violently at some point to at least come back to out of the overbought territory. And so again, this thing has gone up to almost, let's see, gone up almost like 50%. 50% of 40 is 20, 40 plus 20 is 60. So it's gone up quite a bit. So I think there's room for this to have a correction. So what I did here on, as of today actually, is I moved the put strike back down to 57.50. Now this cost me a debit, 61 cents of debit, as you see up here in the formula. So brought back down my credit received. Instead of 468, it is now my max profit will be $1.57. That is my potential max profit. However, what happens by making this from an inverted strangle to a straddle is that now my break evens have once again widened to the point where I could potentially make a profit outside of this. If you delete this built-in loss because there's no more inversion, my max profit is now $4.07, and the break evens are still pretty wide. So assuming that if my theory is correct, the closing price goes back down eventually within the next 20 days, because these are currently 39 days left to expiration. So within the next 39 days, hopefully the price will drop down at some point. Hopefully later on when like the expirations are nearly approaching, I can make some kind of profit off of this, with the break evens being at $61.57 and $53.43. So that's the current strategy right now. I'm currently underwater, but that is expected. What's not expected is the price to continue to climb, and maybe at some point it will drop. I just don't know when. But I have 39 days to figure that out, so we'll see. This next position, again, for Peloton. So some slight change in events. As we recall in the past, for Peloton, I had the thesis that the price was going to continue to skyrocket. I believe in my previous one on 11/29, or I had this comment right here. The RSI was climbing from a double bottom in August, September. It indicates some bullish sentiment. And for once, I was actually right. So from $5.59, climbed up to about $6.22, ultimately peaking at $6.34. You see here on the chart as well, it actually did peak, went up here. So my theory was correct. Since it was climbing up, the price did actually have momentum to the upside. However, now I think the momentum has somewhat died. You see the RSI on December 6th went below the average RSI, which is the yellow line. So I think that the bullish momentum has actually died out. And so what I ended up doing was I sold an option with the strike price at $5. And I did that because I think that Peloton tends to have a lot of violent crashes. So see here that it'll climb for a few days and it'll just go down. It'll climb for a few days and then it'll just go down. It'll climb for a few days and I think it'll just go down. So what I did was I sold the strike. I bought back my call strike at $7. Bought that back, sold one at $5 for a 93-cent credit, which moved my average credit from a negative 11 cents to 82 cents of credit. So now I have a potential to make a profit on the credit side, on the option side. And my break even has gone down to $5 now. Gone down to $5. So looking out to see when I could potentially realize that the price were to drop down to $5, which maybe with this lack of bullish momentum now, it may go down violently back. Good news is that since I have a $5 break even, or $5.21 break even. Sorry, there's no decimal places. So the $5.21 break even is now my new point. If it goes below that price, I could potentially realize a lot of option profit of about 82 cents. And then that happens and the price still continues to stay around $5. I could continue rolling this option out in time to continue lowering my cost basis to eventually where this gray ideally would go down to zero. But for now, just continually building my cost basis reduction in order to make a profit. So we'll see that currently it's at $5.21. Price keeps dropping. I have about 39 days as well on this. So there's plenty of time for this Peloton stock to build a break even reduction. So that's currently my strategy for this one, kind of plain vanilla. And we'll see how it keeps going. So I'll keep an update maybe whenever I get time to just show how my current theses are going. So hopefully this was helpful. This is anatomy of the trade. Just wanted to give an insight on what my thought process is and show that not everything is just profitable right away. So hopefully keep sticking to some kind of strategy that you continue to make a profit. Not in every single cycle, but hopefully within the cycle, 1 or 2 cycles, maybe 3, or at least mitigate your losses. So hopefully this is informative. Hope to see you guys in the next video. Talk to you guys soon.